Awesome. You made it. Hey, we're just going to dive right in. So what we're going to be looking at is how you can identify momentum in the market. And the reason why we want to look at momentum is because momentum is going to show you a lot of influence, a lot of flow, a lot of push. Okay? And this is important. This is important when trading. And if you're trading with momentum, you can minimize your risk. Okay? Check this out. The first thing we want to do is add our exponential moving averages. Then we're going to add momentum, money flow index, and the relative strength index. Now, this might seem like it's going a little bit fast, but just remember that it's recorded and you can pause, you can rewind, and you can just follow along. So let's dive. Now, we're looking for traffic zones. Once we find our traffic zones, we are going to see where the market breaks out of the traffic zone. Once we find our traffic zone, we're going to see where the market breaks out of our traffic zone. We're going to see where these lines cross. And we're going to make sure that all three of these lines down here, our momentum, money flow index, and relative strength index, we're going to make sure all those three lines are below the 50 mark. All right, so let me show you how. I'm going to remove all my indicators. I just right click, go down to remove all indicators, remove drawing tools. That's cool if you want to see that. So I'm looking at the euro against the Japanese yen. I'm on the 4-hour chart. It really doesn't matter what pair you're looking at. It doesn't matter what time frame you're on. Okay, so let's add our indicators. We're going to click on indicators. Depending on what platform you're looking on, you may have to just add moving indicators, or moving averages, or you may have to type in EMA for exponential moving averages. We're going to click that twice. Now, I'm going to just go over this before I go over the others. Let's go ahead and click this I to hide real quick. And let's click on format for the top EMA. First thing we're going to do is go to inputs. Under inputs, we're going to turn length to 3. Length becomes 3. On style, let's make that red. And we'll drag the cursor over to darken it. Okay, we can even slide this bubble up a notch. Excuse me. You can slide this bubble up a notch to make the line a little more bold. Might help you see, if you can. So input is 3, style, red. Now the reason why we look at this line is, notice that this line stays with price. It doesn't leave price. This line stays with price. We want to see where this line goes flat across, or where this line goes straight as far as up or down. It doesn't matter if it's a buy or a sell. So let's look at that. Wherever this market goes flat, like this is traffic. And wherever this line goes straight, right? Notice the line is straight here. This line is straight here. This line is straight here, right? Even on the buy, the line is straight here. On the buy, the line is straight here. This is momentum. So we can see what the EMA on the 3 exponential does for us. It shows us the momentum. Just that indicator alone can show us that. As a matter of fact, on the candles, we're using Heikin Ashi candles. Heikin Ashi candles also help you identify momentum. All right? So we're using Heikin Ashi candles, not the standard candles. Not the standard candlesticks. So straight line and flat line. Straight line is momentum. Flat line is traffic. Perfect. So let's clean this up. Now we're going to go to our second EMA. Let's click on the eyeball to unhide it. Go to format. We're going to start in input. Input is 10. Input is 10. Oh, excuse me, length is 10. Length is 10. Style. Style is going to be blue. Turquoise blue. And that's it. We're not going to change anything else in input and in the style. Okay? So remember I mentioned the lines crossed before? We have our traffic zone, right? We have our traffic zone. We have the lines crossed. Okay? Now we can see what the exponential moving averages, they do for us. Let's go ahead and add our other indicators. We're going to type in RSI for relative strength index. Click that. We're going to type in MOM for momentum. And then we're going to type in MFI for money flow index. Okay, let's start with the RSI. We're going to go to format. We'll go to inputs, and we're going to make this 5. Length is 5. Style, we'll turn that to red. We'll make that plot red. We're going to remove lower limit. We're going to remove H lines background. Okay. Then we're going to go to the right here. And we're going to change whatever that default is. It may be 70, it may be 60, maybe 55 or 65. We're going to make that 50. We're going to make that 50. And we're going to make the color black. I'm going to make that color black. Okay? Perfect. We're not going to change anything else here in input or style. Let's go to MOM, momentum. We're going to go to format. Let's go to input. Input will also be 5. Length is 5. Length is 5. We're going to go to style. Under style, let's change that color to, keep that gold, but we'll go to yellow. We'll go to yellow. Make it bolder if you need to. Okay, input is 5. Style, we'll make it yellow. Make it a little bolder if you need to. We won't change anything else here. Under MFI, money flow index. Under format, we'll go to input. This is also going to be 5. This is also going to be 5. And then under style, we'll make this one blue. We're going to remove upper limit, lower limit, H lines background. We're going to remove all of that. Blue, remove all of the limits, all the checks. Length is 5, hit OK. Now, when I click on this line, I'm looking at MFI. When I click on the line, these dots show up. When I click off of them, they go away. I'm just going to click on them. The dots show up. I'm going to click on the dot, any dot, and I'm going to drag it up. Okay, and then I'm going to click on the dot here on the RSI. I'll just drag that down. Okay, perfect. So here's what we're looking at here. Step 1, find our traffic zone. So we're following price. Price is moving. We're following our red line, and we notice that the red line goes flat. It can go flat or it can bend. Bend is also flat. Anywhere the line bends, it curves, is also flat. So we're going to look for when it bends or when it goes flat. Well, it did it right here. Perfect. So we're just going to get a rectangle tool. Rectangle tool just kind of helps you see it. We'll put our rectangle tool on there so we can box in that traffic. All right, we'll box in that traffic. And then we just want to see where the lines cross. Step 1. find your transition zone. Where do my exponential moving averages lines cross? That's step one. That's an aha moment. They cross right here. Then we want to see where our Heikin-Ashi candle breaks out of traffic. Heikin-Ashi candle breaks out of traffic right here. All right, I'll put a vertical line there so you can see it. Right here is where it breaks out of traffic because the candlestick closes outside of traffic. Now, what am I lining this up with? You can see that I lined up with a wick if you want a little bit of, but it, we'll keep it simple. Literally just put a rectangle there and we'll box it. If you want, you can line it up with one of the wicks to kind of give you a straight line if you want, something to reference it to. But we see where our candlestick breaks out. All right, we'll move to this one. Our candlestick breaks out. Then we look further down, keep looking down. And we just want to see all three of these lines, just like I told you in the beginning, all three of these lines are below the 50. Step one, lines cross. Find the transition zone. The lines cross. We'll put a rectangle over it. Step two, candlestick breaks out of the traffic zone. Candlestick breaks out of the traffic zone. Step three, are our lines all beneath the 50? Lines are all beneath the 50 on our indicators. And then we want to sell, market execution. And what's happening is here is we're going to ride this momentum all the way down here. All right, we're going to ride this sell all the way down. If you wanted to, proper risk management, 20 pips from your entry. So wherever your entry point is, you set your take profit 20 pips out, 20 pips in dip. If you're not using a take profit, then you want to use a trailing stop loss. How do we do that? How do we do that? When you enter the market and use your stop loss, every new candlestick, just take your stop loss line, wherever your stop loss is, and you're going to move that stop loss to the end of the previous candlestick. So if we entered the market on this candlestick and the market is now here, right? If the market is now on this candlestick, we'll just take our stop loss and we'll move it here, right? On a flat top candlestick, on a flat top Heikin-Ashi candlestick. That really helps. So here's a new candlestick, we move it here. Here's a new candlestick, it's a flat top, oh definitely, we'll move it there. Here's a new candlestick, it's not a flat top, but just to be safe, right? Because this is basically telling us something else. This is telling us, a doji candle is telling us that the market may go the opposite way. Either way, we move it here. But it didn't take you out yet. Look, this candlestick took you out. This is how we use these indicators to identify momentum in the market.